Hello everyone, Happy New Year. Wishing everyone a healthy and prosperous 2024. I'm John Slazas from Dharma Capital Trading, and I'm going to continue on updating Ethereum. Before we get into it, I want to go through a disclosure. All information that's presented are for educational purposes only and should not be considered specific investment advice nor recommendations. Cryptocurrencies, futures, options, forex, and stock trading contain substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not indicative of future results. And definitely, if you don't have the capital, you don't want to trade it. Trading's tough enough, and you need to stabilize those emotions so you're making good decisions, and that's what we're all about with Dharma Capital Trading, is providing fact-based trading solutions. So fact-based trading involves making decisions based on objective data and analysis, reducing speculation and subjective biases, providing you with a benchmark. And we do that with our analytics to standardize the decision matrix. We also have applications that normalize those analytics into your workflow. And then we do work with traders and to provide development and education to optimize tactics. And our method is consistent. It's always the same thing. We're laying the foundation to define the context of the state and identify those characteristics. And then we find the alignment points and the structure of where that state will change or persist, where they make decisions. And through that, we get an expectation, and we sum everything down to an if-then statement of what's more likely to occur. And if you like what you see today, come check us out at dharmacapital.trade, and you can test drive all of the analytics that we're going to go in and go over today. Our method is built upon the foundation of behavioral finance. It stems from Daniel Kahneman's book, Thinking Fast and Slow, where the outside view offers more of an accurate prediction than the inside view. This is really talking about your intuitive decision-making process and how cognitive biases can get in the way. And our method incorporates a statistical outside view to help slow down the decision-making process to minimize those biases. And so that we are your benchmark fact check. All right, let's get into it. All right, so we're going to start where we left off. And again, we were focused in on this, basically the 2200 strike. We had that key inflection point that we noted that the market really needed to take out to say that this negative momentum was done. And so they did that, and now we're still trading above it. And we're hanging out here. We've got a new year, so let's take a look at that. Basically, we've got a market that closed on its yearly high. And so we have that alignment with the previous year high and previous year close. So this is a real dynamic structure. And typically in these situations, the market will either just base here and just go, or that becomes the high point of a digestive trade. So we'll see how that plays out. All right, I'm going to dial into this microstructure here, and we're going to take a look at what's happening for the Q1. And so I'm going to shift to a smaller time frame there. And what I've done is I've identified the last 2 weeks of the year, and we call this, basically we were talking about this is the settlement phase, and this is going to influence us as we come into the opening phase of the first 2 weeks of the year. So we're going to use these kind of parameters as a guideline. So let me dial in even a little closer here. Now that you have an understanding of where we're at, so we can just kind of see some actionable opportunities that are going on. So this is the last 2 weeks of the year. Here's the midpoint. So we can see here at the start of the year, the market is coming up at the midpoint of the settlement phase, and it makes a challenge to the settlement range high. And after that challenge, it rotates back through the midpoint and tests the settlement range low. Actually takes it out. So this is a little bit of sign of weakness. Here's the inflection point that we noted, where that comes into play. I'm going to add the previous quarterly structure. So we can see the previous quarter high. If I say that's in alignment with the previous year high, we've got the previous quarter low. Previous quarter close is the end of the year close. So here's that interesting range that I mentioned, and we are below that previous that close, so we're net change negative currently. And then we have the previous quarter midpoint. The market did make a play for that midpoint. So now let's put on some market structure. The sentiment bias for Q1 is at 1746 off our downside pivot. So that's our direction downside pivot. I'm going to put on our critical range. So this is kind of our containment boundaries. See how that matches up. Let me widen that out a little bit so it can be a little clearer. All right, so we've got a market that is trading off the directional, so the 2164 directional. Our upside pivot is at 2682, so this is our critical range for the quarter. I'm going to put our validation points on. And so what happened at the start of the quarter was we had a lot of confluence with the previous year high, previous quarter high, and the critical range positive, which at 2423. So what these numbers are validation points of momentum. So as the market is moving is positive above this directional pivot, so you've got a critical range. You could look at this as the high point structure, the low point structure, and this is like the rotational number within that structure range. And these are the momentum validation points. So when you have this alignment here, this basically a trade above 2450 is going to tell us the momentum is going to pick up and go. And this positive momentum is true. It's going to be able to do it. Same with the downside. We move into the downside below here. It's negative. It really needs to validate below here to get a play for sentiment. And sentiments are over under number for the quarter. So buy breaks above here, sell rise below here. So ultimately, this is where all the buying energy is. And then we're looking at value trades. This is the biggest value opportunity. Next value opportunities are here and here. The one thing about our price map structure, it's consistent and unified across all time frames. And so with the markets, topping out here at the CRX plus, this is a classic setup. I'm going to go to one of our tutorials real quick. So it's our website. When you come into that, we have a full set of tutorials that go through all of our stuff, and this goes through each of the components and qualifiers of the price map and the critical range. And so the critical range is made up the upside pivot, downside pivot, directional, which is the rotational number. It's not necessarily the symmetrical midpoint, but midpoint of that range, and then the validation point. So if the market is moving through the directional, this is the validation point to attain the upside pivot. And if we get a breakout of the critical range, this is the validation point that says, yes, we're breaking out to the upside, we're validated, it's true. And so what happens sometimes is we'll get what we call a CR rotational trade, and where the market will challenge the one of the interior validation points, not able to really validate that momentum, and it triggers a rotational trade to the opposing critical range level. And so that's what's that's what's happening currently in the market, where we have on the quarterly basis we've tested this area, and a lot of times what will happen, it'll want to rotate down to this area. So that's something that we want to be aware of currently. Bottom line is, we broke this positive momentum, so the market tried to break out. It couldn't get outside, make a new move high for the quarter, new move high for the year. So, and then we came through the downside of the directional, which is basically a pause, a break in structure. So this is basically telling us that we're going sideways. We know the buying energy is down here. Is that all we get? If this was just a complete head fake, what you'll see happen in the next day or two is this market's going to pick up and start to build this kind of positive structure, and it'll reclaim above and basically just go positive on the year. So even just using that as a metric boundary for your momentum, key off the net change, because it's the, not only is it the close for the year, close for the quarter, close for the month, it is also, and the week, it's the close for the actually it's not the close for the week because that's based on Saturday, but it's the midpoint of the settlement range, and so that'll be a good momentum point. And the 2400 2450 strike is the the upside breakout of the validation point here at 2423. Let me and then where can that go? We can see that get up to 3150. So we've got our critical range at 2682, and so typically if the market makes a move from the directional, it likes to go two segments, and so we call this an average price map distance. And so minimum expectation is to attain CR plus. This is the expectation, and then this would be the objective. And so currently we're in that potential for a CR rotational trade. See the market stabilize here. So more likely, if we do get a pullback, we're going to stabilize off the previous quarter midpoint, and basically the 2000 strike, 1950 strike. And that's what this action here is telling us. So we may not get an opportunity to get long off of this area if we get unless we get really another emotional situation here. But that's that would be the expectation, would be one of those V bounces, versus if we do get if the market does start to roll over here, we'd see more of this type of action, but here. So a lot of times they like to do symmetrical trading. So the fact that we basically failed from the figure, we'd expect it to stabilize off the figure here. So let's just dial in a little bit. I'm going to shift into the monthly structure. So let's take a look at the we'll do the previous month. So here we have the settlement range for the month, which is the last week of the year. So it's a little tighter, and we actually broke out to the downside of the settlement range. High was obviously the same, midpoint's a little tighter. And here is the previous monthly high, previous monthly low, and the close and midpoint. So you have basically this for the month. We're really kind of dialed in here within the 2280, 2245-ish area as a good momentum area, for the current month. And we can see where that our inflection point, it came in right at the bottom of the sentiment the settlement range low. So let's put on the monthly sentiment bias, and that's below the market, which is understandable from the big surge that we had. So this is a little higher than the quarterly sentiment bias, And let's take a look, and now let's put our critical range on. And so in this situation, with sentiment below the market, energy's here, and we have our two containment areas with the upside pivot and the downside pivot. So let me just open this up a little bit. And we can see for January, the market made a move right off the directional pivot. We'll put our validation points on here, just get consistent. And so we validate, which tells us that this rally is going to extend at least up to the upside pivot. It does, and we get a rejection there. And market, this is kind of normal. We're climbing a ladder. You're going after each rung, and it should stabilize here and go. It should just as you have price structure, higher highs, higher move lows. As you're climbing the market structure, you should once you breach a structure point, it should stabilize above it and go. And here it doesn't. So this is our break-in structure, which coincides with a failure from the settlement range midpoint. And we anytime sentiment's way below the market, it's always a magnet, and so the market gives us this sharp release, making a play for the previous month low, which it stabilizes above, which is in line with the downside pivot. And so now, basis the monthly, this reaction, our pullback here, came back to the previous monthly midpoint. And so again, that range here is really key on momentum, for the balance of the month. So as long as we're below 2280, net change negative on the month, simple as that. This thing's vulnerable, but really below 2240, really below the directional here and the previous monthly midpoint. That's where things, are a little tight, and we're more vulnerable to further losses. And where can it go? It can go to sentiment. And so, we have lots of news coming out, or maybe not. We definitely have some figures coming out on Friday. And so, the way I look at this is, one of our strategies, as a crypto, you're a holder, or you're looking to invest, or you're looking to accumulate. This is your accumulation. And so we are looking for capitulations. We're looking for exhaustive reversals to accumulate on. The market has told us that it's broken structure. And as long as it's below, the 2250 strike, it's vulnerable. And the expectation is either going to stabilize around 2000 off of this area, or it's going to stabilize off this area, somewhere in this zone. So we're looking for any kind of exhaustive blow off into this zone. Anytime the market gets, as the market approaches 2000, that's when you really want to dial into the lower time frames to look for any triggers. So that's the expectation. So as long, with sentiment below the market, it's buy bricks above here. So on the upside, if the market does rotate back through and goes net change positive, the fact that it had the opportunity to scale here, and it didn't. And so what's more likely to occur is if we do get a retest of the highs, so if we do take out 2280, we do go net change positive, the expectation is we're going to get a retest of this area. We would expect this area to contain it, at least for the month. Just because it's telling, the market's telling us it's not really in the trending mode right now. And so any kind of positive push, end of the story is going to be we're not expecting it to follow through. So we would look at 2550 area. The 2550 strike is kind of the upper containment currently. Obviously, with some news event from the SEC, this can change everything. This is what the structure says. This is what the fact says. That the market, how it's behaving. And what's more likely to occur is that we're not going to follow through, even if we do get a positive push. What is likely to occur, so currently we're in a hedge theme basis the monthly, and the market's vulnerable. So I added the quarterly CR minus. So we were talking about that quarterly CR rotation. So that's coming in at the CRX minus. So this is that validation point for a critical range breakout, and so there's good confluence here. So looking at this 1950 strike on the downside as kind of the containment low, with with a buffer down to 1850 as a potential capitulation if we get a really a squeeze down that way. So if we're really going to simplify this, basically the 2300 strike is your pivotal momentum point. It's really lower than that, probably 2250. On the downside, 1950. Absolutely, this thing, if we do get further losses, stabilizing off of 2000 or having a capitulation down to 1950 with 1850 the extreme on the downside, it's a break to buy. We do, trading back, basing above 2250 as a tell. We might want to go higher. We're going to take it out, but you could use the 2300 strike as your market's going to follow through. And where can it go? Absolutely, retest the highs. More likely, you're going to get some kind of reaction there. Maybe not initially. It makes sense that for this thing to make a new high. We've had that big positive momentum, so for it to make a higher move high, to keep the positive trend going, makes a lot of sense. But the expectation is that initial push is not going to follow through. So just be careful on that, especially just through the month. January is the opening phase for the year, and so typically the market likes to create a range that kind of defines what we want to do for the balance of the year. So I hope you enjoyed that. Any questions, feel free to reach out to me directly at info@dharmacapital.trade. You can follow me on X, Dharma Cap Trading, and if you like the video, you can share it with others that you think might appreciate it, and definitely like our YouTube channel. We do have a Substack that we're going over Bitcoin if you're trading Bitcoin as well, and we will continue to update our YouTube channel. So, look forward to anyone that reaches out, speaking with you in the near future. And when you do come on to the website, you can register, and we have some different tools, some core strength assessments, and we have tutorials, and you can also take advantage of our applications and analytics. So good trading, good luck. We got some good volatility. It's 2024, here we come. Cheers.